Good afternoon, everyone. My name is Pooja Dwivedi. Welcome to my class. Let's start talking about the recent decision that has been taken by the Monetary Policy Committee. The Monetary Policy Committee, according to the amended RBI Act of 1934, meets once every 2 months to announce the bi-monthly policy. It talks about the rates such as repo rate, bank rate, marginal standing facility, standing deposit facility. Everything is announced in this bi-monthly policy. It affects you as well. The entire monetary system or the economic system is affected by it. That is why, from the perspective of future bureaucrats, it is important that we know about it. From the perspective of prelims as well as GS Mains Paper 3rd, you have to remain engaged till the very end. Moving on, do not worry about notes because I provide the notes through my Telegram channel. That is by the name of Pooja Dwivedi UPSC. If you have any queries regarding this examination, you can talk to me on my Instagram, follow me on Threads. Repo rate has remained unchanged for the 4th time in a row. That is, it is still at 6.50%. Since the last year, we are seeing it that the RBI is keeping it at this particular rate. But what is the repo rate and why is it important? A commercial bank does its profit or gets its profit from giving loans to the consumers. The consumers in return pay interest along with the principal amount. But where will the commercial banks get money to give loans such as this? They will go to the central bank. Please give us some money so that we can earn profit. The central bank, that is the RBI, will say, okay, I will give you this amount of money, but you have to give me some kind of security. So the commercial banks will provide as a collateral government securities in return of the loans. This is a repurchase agreement as well. I mean that when the commercial banks will give this government security to the central bank will provide loan on a particular promise that when the time comes, you have to purchase this government security back. So this is the repurchase agreement or the repo rate. The higher the repo rate, the lower the amount of money will be in the market. Why? Because supposedly I as a commercial bank want to get loans, but I also will have to keep in mind the interest rate. If I have to pay a huge amount of interest rate, supposedly 10%, why will I take loans? So the RBI, if it wants to make sure that there is not enough money in the economy, then it will increase the repo rate. It will increase the repo rate so the banks will not go to the central bank to take money in form of loans, and similarly the banks will not have enough money to give to the consumers. The lesser the amount of money the consumers will have in their hands, the lesser the demand will be. So this is the basic detailing of the repo rate. It has remained unchanged. But as the time is progressing, as we are going towards a more, this particular stance is being not very well for the RBI for now, right now, because inflation has not eased. That means RBI in the future will withdraw the accommodative stance. This is accommodative stance only. What is accommodative stance? When the RBI is thinking about let's keep the economy running with more amount of money, that means this is an accommodative stance. But now it is going withdrawal of accommodation. It will soon increase the repo rate for the very same reason I told you before, so that there will be less money in the economy. The standing deposit facility rate is generally a little lower than the marginal standing facility, and of course it is a little lower than repo rates as well. What is standing deposit facility? Standing deposit facility is a tool that is used by the central bank, that is the RBI, to absorb the excess liquidity. If there is too much liquidity or too much cash in the economy, the banks, by this particular rate, they are encouraged to park the excess amount of funds with the RBI so that they can earn an interest. Okay, so this is standing deposit facility. Okay, this is a non-collateralized liquidity management tool. There is no need of any collateral, unlike the repo rate. Also, SDF is introduced to bring down liquidity surplus and control inflation. If the banks are encouraged to park the excess amount of funds with the central bank, they will rather give it to the central bank, not the consumers. This is the basic rationale behind it. Then we have the marginal standing facility rate. What is marginal standing facility rate? It is through which banks can borrow funds using government securities as collateral. But it is generally higher than the repo rate. Why? It is higher than the repo rate because this is an overnight facility. It is generally higher because it is an overnight facility when the banks are undergoing through acute fund shortage. So this is kind of a penalty that the RBI gives to the central banks, commercial banks, that why are you not taking care of your economic situation? If you're going to do like this, then I will charge you higher. Alright, so these are the basic things that you need to know. Moving on, let's talk about the impacts, also the growth rate projections. Of course, the growth rate projections are such. For quarter 1 for fiscal year 24, it is 6.5%. For quarter 2, it is 6.5% again. For quarter 3, it is 6%, and then quarter 4 is a little below 5.7%. Yes, the P2I batches are going to be launched from 10th October. And this will be an evening batch. We have divided our batch into 3 segments: silver, gold and platinum. Those students who are going for silver batch can opt it for 18 months. The validity is. Then gold is 30 months, platinum is 42 months. Not only your study materials and the classes which will be live in nature will be there, but also many other things such as prelims test series, mains test series, answer writing practice. Everything will be done. Even a StudyIQ campus facility is there. If you're able to qualify the designated UPSC prelims examination, you will be called to the StudyIQ campus so that we can meet there. And then we will prepare you for the UPSC mains examination without any added charges. It is all added here only. Silver costs 23,999, gold is 26,999, platinum is 29,999, and you have to just use the code PDLIFE for it. Okay, make sure you take admission as soon as possible. The pause, this is a kind of pause. The pause in the repo rate fourth time since the RBI started hiking repo rate in May 2022. This was to check inflation. I have already told you the rationale behind hiking the repo rate. Overall inflation outlook is right now clouded by uncertainty because there is a fall in the Kharif sowing. There is lower reservoir level, volatile global food and energy prices because of the Russian-Ukraine war that is going on, recurring incidents of large food price shocks that is happening because of the very same reason. The thing is that it will be good for the EMI people, the people who are paying in the equated monthly installments. Why? Let's talk about that. See, all external benchmark lending rates are linked to the repo rate. These will not be rising. Why? Because it is stagnant. External benchmark lending rate is basically the rate which is related to tools such as repo rate, MCLR. So when the repo rate is not increasing, the banks will also not increase the external lending rates. And this is going to be very important for those who have already taken loans and they have to be relieved in the similar manner. Alright, this will not increase. And EBLRs now dominate the mix of outstanding floating rate loans. So most of the people who are on EMI right now, they will not be having any sort of issue. But the share is rising to 48.3% by December 2022. Also, banks will not increase the fixed deposit rate. Right now, banks do not have any plans to increase the fixed deposit rate. Why? Because if the fixed deposit rates will increase, more people will start parking with the bank. Alright, and right now the banks are fine with the amount of reserve that they have. Why? Because of the withdrawal of the 2000 rupee notes from the circulation. So banks have enough liquidity with them. The decision to hold deposit rates at the current levels will be driven by surplus liquidity in the banking system. As I told you, because of the withdrawal of the 2000 rupee notes from the circulation. There is an improvement in the low cost current account and savings account for this very reason. There is going to be a withdrawal of accommodation until all risks of inflation go away. That will take time. Because both domestic and external factors are not in favor of the economy right now. I've already told you about the 2000 INR notes. Now you have to keep in mind that the total value of rupees 3.56 lakh crore. banknotes that were in circulation as of May 19, 2023, rupees 3.42 lakh crore has already been received by the banking system. There is a particular thought process that is going with RBI right now, that open market operations will also take place to manage liquidity in the system. That means the government securities will be launched in the economy so that people purchase it and institutions purchase it, so that the RBI can get back the amount that is going on in the liquidity. Supposedly, if you take it from this perspective, this is open market operation. Suppose this is government security. These are the people who want to buy it. They have a lot of money. So the RBI will send out the government securities, will sell the government securities, people will purchase it, and this amount of money will be with the RBI instead of the people. Hence, people will have savings with them in the format of government security, and the excess liquidity will be taken out from the market by the RBI. Retail inflation has eased to 6.83%. If we compare it to the 15-month high of 7.44% that was in July, but it is still above the comfortable range. Comfortable range is 2 to 6%. Within this range only the inflation should be. The most appropriate is 4%. Okay, moving on. What is monetary policy? Let's understand this. Monetary policy is the policy of a central bank that wants to use monetary instruments such as repo rate. We have whatever tools that I told you, fixed rate, then we have bank rate, everything that's a monetary policy tool. To maintain price stability, also keeping economic growth in mind, according to the amended RBI Act of 1934, there is also an inflation target that MPC has to achieve, that is 4% plus minus 2%. That is minus 2% from 4% is 2%, plus 2% in 4% is 6%. So 2 to 6%. Now this particular range can be changed as well. It is set by the Government of India in consultation with the Reserve Bank once every 5 months. So this can change as well according to the needs. Section 45ZB of the amended RBI Act that was done in 2016, the central government is empowered to build a six-member monetary policy committee, and that is to determine the policy rate required to achieve the inflation target, which is binding on the bank. Okay. Also keep in mind, we have to determine the policy rate that is required to achieve inflation rate. So it can change according to the need of the hour. Section 45ZB says the MPC shall consist of 6 members. How many members you have to remember? RBI will be the ex-officio chairperson. Then we have the deputy governor in charge of the monetary policy. An officer of the bank to be nominated by the central board. 3 persons will be appointed by the central government on the basis of persons of ability, integrity and standing, having knowledge and experience in the field of economics or banking or finance or monetary policy. So 3 from the central government, 3 will be like this, and unanimously the monetary policy committee has now come on the ground that they are going to keep the repo rate unchanged. Okay, remember that. Now this is a practice question for you. With reference to the Indian economy, consider the following: bank rate, open market operation, public debt, public revenue. You have to see how many of the above is our component or components of monetary policy. These are the given options. Let me also take the names of those students who have answered my last question correctly because it is important. So yes, on the issues of Kejriwal will be the second CM to be arrested question mark. I asked a question. Many of you have answered it correctly. Satya has answered it correctly. Vinayak, Varun, my goodness, Neeraj, thank you Neeraj, Simran, Jayant, Shruti, Manish, Vijay, Lalit. Thank you so much for answering the last question. Answer this as well. Alright, thank you.